The 30-year yield is on the rise and the market seemed to like it, suggesting that the peak for yields could be near. So today, we're taking a look at what that means for recession probabilities and the market moving forward, because once the yield uninverts, a recession is normally 3 to 6 months away. We also need to discuss unemployment. It also could be on the rise, with manufacturing payrolls contracting in October. Could we already be in a recession? With the S&P 500 closing at the highs of the day, we need to talk about some sneaky dark pool trades, what to expect from earnings, and how to position ahead of Max Payne. Welcome everybody to the Stock Market Daily Recap, where we talk about stocks, commodities, cryptos, leading indicators, and macro analysis. We saw broad-based buying across all sectors today, except for energy, which was fairly muted, and biotechnology had an overall red day, but that's just biotech for you. Other than that, it was technology, communication services, cyclicals, defensives, financials, all saw broad-based buying everywhere. Apple didn't do so well, it weighed on the tech sector, but semiconductors, really fantastic, and they still continue to be the best performing sector, I think, for this year. Having a look at these sectors as a whole, we saw consumer discretionaries put in a very strong day, followed by communication services. Technology not far off, but it was just green everywhere you look today, except for energy, which saw, actually energy did see an increase, but it was the worst performing sector for the day. One thing to note here is that the VIX got absolutely crushed, down 10% below that 17 handle, and VIX got crushed and stocks rose on the back of that. So let's talk about earnings. A lot of the market action over the next month is going to come down to earnings. There are other concerns, but earnings lead the way. The macro and the fundamentals are everything in the market right now. And the two big ones, Netflix and Tesla. And if you haven't checked out yesterday's weekend recap video, I break down Netflix and Tesla's earnings, what to expect, what to look for, and where they might go. Now here's the implied move for earnings. And again, we spoke about this yesterday, but you can see here that Tesla is looking at a plus minus 7%, as well as Netflix, looking at probably 8.5%. Huge amounts of volatility to come over the next week and even more over the next month. If you are looking at earnings, it probably means you are a long-term investor and you care more about the fundamentals than the technicals, and you'd be looking at charts like these. Is the S&P 500 cheap right now? And based on the forward 12-month earnings, the S&P 500 is sitting at 18.3 times earnings, which is fairly cheap. Normally you want around the 17.5 PE mark, but at 18.3, considering the strength of the US market, and it normally does trade at a premium compared to the rest of the world, that is pretty cheap, all things considered. Today, stocks went higher and so did yields. This was very weird, and this caught a lot of people off guard. They were like, there's no correlation in this market. You have to understand something. The reason why stocks were up is because the 30-year yield was up 2.29%, whereas the 2-year yield was only up 8.5%. And that means the yield curve is starting to uninvert, and that probably means short-term rates are probably topped out and bond prices have probably bottomed. Now let's have a look at this chart, and it's the 10-year treasury constant maturity minus the 2-year treasury. So it's the 10 to 2-year spread. And then we also have the federal funds effective rate. So this line here, the second this red line goes below this, the yield curve is inverted. The yield curve inverts, it then uninverts. This gray area, okay, these gray areas are recessions. So then once it uninverts, we have a recession. What happens to the federal funds rate? Yields fall. Same thing right here. Uninverts, recession, yields fall. Same thing here. We uninvert, recession, yields fall. And look at where we are right now. The 10-year is still inverted, but we are moving upward. There is upward action, and the minute that happens, we uninvert, probably rates are going to come down. And that's why stocks are moving higher today, because they're seeing the dislocation between the 30-year and the 2-year. Longer term rates are moving higher, and that bodes well for the market. Now let's actually have a look at Fed fund rate futures. Previously we were pricing rate cuts sort of around this area right here, March 2024. This has now moved to sort of April, May 2024. Now this is not set in stone, these are just the futures, but it is something to watch, and we need to be reactive and predictive to the market. As it stands right now, rate cuts are going to be happening Feb to this July, August area. Somewhere in here, we are looking at rate cuts coming into the market. And that bodes really well for treasuries. Structure is starting to form on the TLT in this area right here. And that probably means rates have bottomed, at least for the interim. And based on all the other factors, the Fed fund rates and what rates are doing, what stocks are doing, and probably come to a conclusion that, rates are finding a bottom in the near term. And that bodes really well for inflation. With last week's inflation numbers, the CPI came in really hot at 3.8%. 2.7%. And the market sold off on Thursday and Friday. It was pretty brutal selling, but there is some good news right here. Half of the inflation was because of CPI shelter cost growth, which is at 7%. Half of the inflation number was that. And based on Mark Zandi right here, he says the growth in consumer prices for shelter is headed much lower because, as you can see here, CPI shelter normally lags multifamily rent growth. So it tracks it right here, and then as multifamily rent growth goes up, then CPI shelter goes up. But as it goes down, it's probably going to come down all the way to this level right here. Consumer prices for shelter is headed much lower, and this will push overall inflation back near the Fed's target by this time next year. And that sort of lines up with when rate cuts are happening in May, April, and the flow-on effects of when we're going to feel those rate cuts in August, September, October. According to Mark Zandi, based on everything we're talking about right now, rates and inflation, we can sort of say that, maybe we are seeing a short-term bottom in rates as well as inflation. We could reach that 2% target that the Fed is really adamant on. Does that mean this is a good time to buy stocks? So this is the average cumulative daily return of the MSCI World Index. On average, 2/3 of equity returns occur in the last 10 weeks of the year, and it normally starts about October 12th. We get this basing pattern right here, and then an absolute moonshot into November and December, where there's limited trading days as well as positive flows from dealer positioning, Varna and Charm flows. But again, let's break down seasonality for October. Pre-election year seasonality, we see muted action. For the start of October, we do see some form of a sell down towards the end of October, the back end, and then a rally into November and December. I just showed you the full year seasonality, then I showed you the month of October. Now we're going to break down the week. And this is a comparison of the S&P performance in the last 12 monthly OPEX weeks. So this is October. We have OPEX this Friday. On this week in October, over 40 years of data, we've had 30 up weeks and 10 down weeks. So we're 30 from 10 with positivity, and we're about 0.7%. We normally climb 0.78% this week. Based on today's action, we're well ahead of seasonality. And so we could see some selling, taking profit towards Friday this week, and I'm going to go into that in terms of max pain and where that lies, as well as some sneaky dark pool trades. So I'll continue to watch this video, guys. There's a lot coming. But we can see here that, generally speaking, this week is actually positive for the market, and it's actually the second most positive week, OPEX week of the year, 0.78, with the most positive being in April. This is just a statistic. It doesn't mean you need to rely on it fully, but it is good to look at data sets like this, which are fairly extensive, and then you can draw your own conclusions. Another positive seasonal factor is that we have $795 billion worth of share buybacks, which are authorized for next year through to September 22nd. There could be more by now. This is how much we've received right now, and this is just going to add on to the positive flow-on effects for the year, especially with the limited amount of trading days we have in November and December. On more bullish factors contributing to seasonality, we can see here that CTA positioning, according to Goldman Sachs, CTAs are net longs into November and December, and up to close to maybe $150 billion worth of equities they need to buy over the next 2 months, which is very, very positive. Let's get into some sneaky dark pool trades. Now, what do I believe the market is going to do? I did highlight these dark pool trades on my Friday video. I said, I did look at the S&P500, the NASDAQ, and the Russell, and we all saw these massive trades towards the end of the day. I did say these were probably buys looking for action into OPEX, and that's exactly what happened. We saw these buys right here, and then rocket ship. We did see another buy right here. Could that be a sell? Could that be a buy? I'm going to get into that a bit later. Let's have a look at QQQ. Again, same situation. We highlighted this on Friday, rocket ship. Okay, what does that exactly mean for the market? This is max pain for the SPY is 430, okay, and max pain for the QQQ is 367. If we actually go back to these charts right here, we can see that for QQQ, the price right now is at about 370. We had buys come in when max pain was right here, this area right here. Could these be sells to bring the QQQ back down? We're gonna have to see. Very, very interesting dark pool trades. Same thing, S&P 500, max pain was at 430, this area right here. Could these be sells to bring price down? Potentially. We are ahead of seasonality, and if we are to see sell side towards OPEX, it would be completely normal. That probably bodes well for some form of sell side to come later on in the week. Now, it's not certain. What I do believe is going to happen is that we are going to come down lower into max pain. A lot of people are sitting on their options, very, very happy right now, but there's still an entire week of trade to go. Let's see what happens. Let's move into options activity, and it was a fairly average day for options right here. By the way, Hilton 116 times 90-day average volume, as well as Marriott 143 times. So something is going on with bookings, hotels, real estate. Something is going on there. I don't know what. Something's going on there. Okay, Lululemon 6 times volume, which we know that their addition into the S&P 500. That's why their volume is so high. As well as, the same old. We have McDonald's right here, still trading at extreme options volume, as well as TLT. TLT coming in pretty fairly high. Other than that, it was pretty average volume. You can see here that it was only 33 million total options contract volumes, and normally it's 39 million. But we did say we wanted to see this. Okay, this was important. 51 puts, 49 calls. It was 50-50, and I said if we want to see some buy side action, we want to see puts stack to create some form of a put wall. That's exactly what we saw today. 51% puts, and the market just rallied. So go ahead and look at Friday's video. I did say if we want to see some buy side action, we want to see puts stack. Yeah, not a whole lot of volume, but expect volume to really ramp up as we go into Friday. Moving on to economic data and the US economic calendar, we see here that we do have retail sales as well as so many board members speaking this week. On Thursday, there's not too much data. We do have initial jobless claims, which is always good to watch. On Thursday, I believe we also have Jay Powell speaking. So Jay Powell is speaking on the 10th of the 19th. Thank you so much for watching, guys. Please like, comment, share this, subscribe, help me with the algorithm. If you want more of these, leave a comment what you want to see, what you want to go through, if you want detailed chart analysis. Thank you so much.